Hello everyone, I hope everyone's having a wonderful day. This week we will be doing a review on a expert advisor that was sold by Trevor through SA Forex Capital. Now this company or Instagram group has now disappeared, but as you can see in his Instagram TV, it's still linked as a video. That is proof that they have existed. Now, this system was sold to me for 5,000 Rand on special, and since the company is now dissolved, I'm guessing that it was sold as a going out of business price, because the regular price was 1,000 US dollars, which is a lot higher than the 5,000 Rand that I got it for. I will be giving the robot away for free. All you need to do is go to the astroFx 2.0 video, go to the description and click the link that is in the description. You'll come to this folder in my Google Drive. The first folder is the expert advisor. This goes into your advisors folder, and the second folder over here is an indicator. This will go into your indicator folder in MetaTrader 4. This guy is friends with Jason Noah. Jason Noah is known for creating Forex Kings, and this is a well-known business. So as you can see, Trevor does have some Forex background, or at least has friends that have a Forex background. The system that was sold to me is called Predator. This robot uses hedging. Hedging is a way where you open two positions in opposite directions. One trade will be opened at a higher lot size in order to offset the losses of the first trade. By using this strategy, you are able to engulf the losses with the larger lot size. This sort of trading is widely used, and that's what makes this robot very accurate. Not accurate in the way that it would take 100% accurate trades every single time, but it does make it very safe for the robot to enter trades, since the hedging will keep the robot from being caught out by a trend or by a range. That goes against the trade that it initially opened. Right here I have set up what the robot would look like while it is operating. The robot uses supply and demand zones in order to place its trades. It will place limit orders at the supply zones and at the demand zones. A limit order means that the robot would like the price to drop from this point, or it would like the price to increase from this point. Once the trade is open, there is two routes the trade can take. One route is where the trade is correct and the robot will secure profits by moving stop losses upwards past your entry points. Another route the trade can take is it hits the second trade, and then from there the first trade that was in the other direction will also change into a higher lot size at the same position. It's a bit confusing, but it's better to show you with a live example. So now you can see a trade has been entered. So now it will either take the stop loss that is here and move it upwards, or it'll hit its take profit over here, or it will open the next trade, which is a sell stop, meaning that it would like the price to keep dropping. So one trade is in the buying direction and the other trade is in the selling direction. Notice that the sell trade has a higher lot size than the buy trade, because once the buy trade and sell trade are opened, there will be losses incurred on either side of the trade, and the second trade that you have opened would have to cover the losses of the first trade in order for you to make a profit. So let's see where this goes. As you can see now, the stop losses that were down here have moved to our entry point, securing our profits, and the sell stop that was over here has been deleted and will no longer be triggered. Instead, there is now a sell limit opened over here at the next resistance. So once this trade is closed, either in a break even or a profit, the next trades can open safely. Another trade is about to open, and now we see the result of having two trades in opposite directions. We have a buy trade that has a take profit over here, and we have a sell trade that has a take profit over here. Another thing you should notice is that the stop loss of this sell trade that opened over here is up here, and the stop loss of the buy trade is down here. These are equidistant from each trade. I can just demonstrate that for you guys. Around 571 pips. This one is around same distance, 571. So now we'll see how it manages two trades that have been opened but in opposite directions. Okay, that trade ended with the buy trade coming out on top. Let's see what that means for our net profit. So right here you can see the buy and sell trade. This one is the sell trade and this one is the buy trade. See how the lot size has increased, resulting in a profit of around $2. And this is basically how the robot makes a profit if the initial trade was not in the correct direction. Please note that this process of opening a trade that is larger will continue, as you can see by this deleted trade of 0.03. So if your market happened to range in one period for a long time, these trades would keep opening and it might be big enough to close your account. That is just a risk that you have to take when using a automated system. Now that I've shown you an example of how the system works, I would like to show you my backtest of this current year. So this backtest would show what you would have gained had you run the system from the start of the year up until this point in time. These are the 4 pairs I have tested. Notice that I have a time frame column. This time frame column should indicate to you that the 1 hour time frame is not the only time frame that can be used. There are many other time frames that will work for other pairs, but for these 4 pairs I have found through my own backtesting that the 1 hour time frame suits them the most. If you do backtest this yourself, you should use the 1 hour time frame as a default, and if that doesn't work your way through the 5 minutes to 4 hour time frames. Now, as you can see, for these pairs that we got over here, the average win rate was 65.5%, and the max drawdown of any pair was $104. Notice that it is dollars, not rands. So at any point in time, if we added all of these together, if you were running the robot on all 4 pairs, at any point in time you could beat with a max drawdown of 244. This is why the recommended account size for safety purposes would be around $300. The extra $60 is in case your max drawdown is a lot higher for any of the other pairs. Moving on, the total net profit at the end of the day would amount to $229 if you ran this robot from the start of the year. This might not seem like a lot for 4 months, but this robot does use a relatively low minimum deposit. It will take its time. It's worth it because this robot can be used on smaller accounts and you do not need to have $1,000 in your account in order to run it. So with that, you will have to deal with the long time frame that it takes to generate a profit. If you have a smaller account, you should aim for a risk reward of 100%. That means that even though you are losing money, your net profit will offset the risk you have taken. Not to say that a 50% risk reward is bad, it's just that if you have a smaller account, you will need to generate safer profits. If I was to give this robot a rating out of 10, I would give it a 8 out of 10. The 2 out of 10 that is left outstanding is because this particular robot does take a while to generate profits that are substantial. The principles behind the robot are strong. The ability of the robot to close trades at break even makes it safer, and the fact that it uses hedging means that your trade will almost always come out as a profitable trade. But the thing about that is that the drawdown will be high if the market manages to range within your trading space. Thank you for watching this week's video. I will be giving this robot out for free since we have reached 50 subscribers on YouTube. Thank you for watching. Goodbye.